What's up, everyone? It's Scotty with MoneyVest. So markets here basically, again, flat here on the day with the NASDAQ here just pushing higher, a little bit closer to all-time highs at 16,346, so up 27 basis points. The S&P 500 also slightly higher, up about 0.5%, trading back up to 5,200, and the Dow Jones trading just under 39,400, up over 80 basis points. So very, very strong gain in the Dow as opposed to the S&P or the NASDAQ. So a little bit of money rotating once again out of technology, out of the high growth flying names over to more defensive and, of course, stable parts of the market as well. So comments from Mary Daly, jobless claims coming out, the 30-year bond auction, and of course the put call ratio and volatility continues to signal some potential for markets to trade back up to all-time highs. So we got lots to unpack in this video. Tomorrow we've got the consumer sentiment numbers coming out, and next week we've got inflation also scheduled. So hope you are doing great. As always, make sure that you drop a like and subscribe to the channel if you're just joining us for the first time. And again, links to our Discord and Patreon is going to be down below if you're interested in joining us, and of course getting access to all the members only private videos, including over 50 tutorials, including fundamental analysis, technical analysis, options trading, and the 30 stock shopping list with my buy targets and intrinsic values. And of course, unlocking all Discord channels, including all the trade alerts and trade ideas as well as options alerts. And of course, you can access all the individual courses, fundamental, technical, options, and psychology of investing in money and markets. 50% off right now. Coupon code is going to be May 50, expires at the end of this month. So link's going to be down below. And do connect with me on Instagram. My handle is going to be CASWRP as well. Link's going to be down below as well. So moving forward, this right here were the comments from Fed's Mary Daly. Sees a really healthy labor market. So she's a San Francisco Fed president, basically mentioned that the labor market and the economy continues to be very resilient and strong, but it is far from weak, and there's a sense that the economy is on more stable footing, and there's a difference in the U.S. labor market getting softer and being weak, and of course right now we're seeing some softening, but it is far from weak. We are not seeing a weak labor market. It's too early to declare that the labor market is fragile or faltering. I see a healthy labor market where people who want a job can get one, because we've already covered the ratio of unemployed versus the job openings, and that's still well above 1.3, which continues to suggest that the economy is again on a strong footing and the labor market's tight. But in my yesterday's video, I specifically pointed to the idea why the labor market is strong, why the job growth is so great, why the earnings are coming in so hot. It's because it's been fueled by a little bit of what's called debt, because consumer debt, credit card debt, of course, auto loans, mortgages, everything has been through the roof because a lot of the lifestyle, a lot of the things are being funded by debt, which is causing earnings to be higher, of course, because companies do have a lot of pricing power and margins continue to expand, surprisingly. And at the same time, they're hiring. That's why its unemployment's low. And we're seeing jobs growth very, very strong. However, we did get the initial claims. So this right here were the initial claims numbers, which did slightly tick higher. So actual number was 231,000 for this previous week compared to the consensus of 212,000. So nothing to be super concerned about. Not until, of course, this number is well above 400, 500,000 per week is when this becomes concerning. But right now it's still within range, 230,000. Yes, a little bit hotter than what the expectations were, but overall, it's still a pretty stable number. So markets, of course, rallying. This rally basically began, the short-term rebound that I'm saying began after the unemployment numbers came in a little bit softer, and jobless claims, of course, putting more fuel to the fire, suggesting that, okay, we're coming in a little bit hotter than what the expectations were with respect to jobless claims. Now, the market rally could carry stocks to all-time highs. So these are the put call ratio along with the S&P 500. You can see the S&P has continued to move higher. There's been a few buy signals on the put call ratio here. And this is, again, the 21-day equity only put call ratio. And we were at the buying level here. And this right here was the last time we were, of course, at that buying zone, which was closer to around that pullback that we saw back in March, I believe, or April. So if you come over to the S&P 500, you'll notice the more recent sell-off that we witnessed was in April. So 22nd April, around that time frame is when we witnessed the pullback for S&P. So that was around that April 19th, April 20th mark, so 420. And of course, since we have recovered very nicely, almost back up to all-time highs. This right here is the 21-day weighted equity put call ratio. Again, suggestive of this idea that, of course, we did see April and a little bit of a May to see that pullback, and now we're rebounding back higher from those levels as volatility continues to come down, and that was of course a buy signal for the markets. So this is exactly the whole idea. Like, this is what we mentioned in our Discord. So if you come over to the Trade Alerts channel, just to give you a little bit of an idea on what we talk about, is over here is the buy list. So this was from 420. And again, this could not have come at a better time, because if you come take a look at this, basically mentioned this is April 20th, 2024. So earlier this year, pretty much last month, Monday buy alerts. This was literally 420. Right? So 420 Monday buy alerts, VUG, SMH, Apple, and Tesla at those specific prices. And remember, these are just nibble and light buy prices. Don't exhaust all of your dry powder. And of course, we did have a lot of other, spreadsheets with our specific nibble prices, light buy prices, heavy buys, no-brainer buys, and fair values, and everything included in there as well. And of course, April 20th could not have been a better sort of timeline to actually dollar cost average and start buying at those levels, because since then, of course, we've seen a very nice 4.5%, almost 5% gain. Not to mention the NASDAQ more specifically has recovered pretty much more than that. I mean, it's almost back up to all-time highs, up over 7%. So it really, I mean, this entire analysis, the entire thesis, the risk reward, all of it, it comes from the back of understanding valuations, fundamentals, technicals, volatility, market breadth, and percentage of drawdowns that we're seeing. So our entire analysis, our entire channel, really, I mean, if I could rename my channel for MoneyVest, it would be risk reward. That's what it would be, because my job here, my objective, my goal with all of you is to continue to hammer down on this idea that risk reward is everything. We need to be analytical in a sense that we are investing at times when we believe that the risk is limited and the reward potential far outweighs the risk that we're taking on. And when prices come down, when markets come down, that's when the risk reward gets better and better and better. When the market prices are going higher, when we're at all-time highs, the risk reward gets worse and worse and worse. Price paid determines your future returns. As price goes up, risk goes up. As price goes down, risk comes down as well. And that's the entire analysis and thesis for why we do what we do, is a constant assessment analysis of risk and reward. And the interesting thing is that now moving forward, what we're also going to implement is very specific high quality trade ideas. Instead of looking at individual stocks, it's going to be more geared towards levered ETFs, because the entry is very, very precise, needs to be very precise when you are trading levered ETFs. And when you are looking at things like, let's say, TQQQ, from that April 20th alert or that signal, through the MoneyVest index, when it was actually a good risk reward and good buying opportunity, since then TQQQ has actually rallied almost 20%. So this trade would have been much better than me dollar cost averaging and let's say VUG, because VUG, yes, it has moved higher from those levels. You can see that April 20th, it's up another 6.8, almost 7%. So that's good. But of course, it would have done much better if this was levered. And that's exactly why I'm kind of working with different tiers of buying. So of course, that nibble buy, light buy, aggressive buy, and no-brainer buy, those are the different tiers of how the market says they're selling off. That's how aggressive you need to be. So that's how we need to kind of turn the dial to be more aggressive. So what I'm really trying to test here, back test with levered ETFs, is if I'm buying, let's say 15% of my position here when the MoneyVest index hits a certain level, then I'm adding another 20%, then I'm adding another 30%, then I'm adding all in, basically all 100%, at levels when MoneyVest index is giving us a pure buy signal and it's way below 2 or 1.5 or 1. And so that's what I'm back testing to kind of figure out, okay, when is going to be the time to absolutely be all in and start dollar cost averaging with the no-brainer buying opportunities here where the risk reward are quite optimal and best. So it really does require a lot of patience. Trading, investing in general requires a lot of patience, but when you are looking at high quality trade setups only, when you're looking at risk rewards the way that I look at them, you're not going to be trading very often, right? It's going to be, what I like to call it, very much of a sniper approach, because you are waiting, you're just kind of picking your target, and then when you shoot, right, that's when you're kind of hoping or expecting a headshot. And with that approach, it's this really patience comes into play, because oftentimes I get a lot of questions, where are the alerts, or why aren't you sending alerts? The idea is, for when the markets are lower, when I feel the risk reward is best, is when I will send out the alerts, and they will perform. In my opinion, the confidence that I have in the ability of our community and everything is going to perform, but it's just going to require a lot of patience, and the returns, of course, would be very much worthy of that patience and the waiting that we have done. So similarly, we'll be looking at TQQQ. FNGU is another example, which includes, of course, your Big Tech and Magnificent 7. This was up a little bit over 31%. So from that 420 low, it's up 31%, just to give you an idea. And of course, volatility is back down to 12.68. So we're quite literally back at lower levels, down over 2.3% here. And again, back in this red rectangle. So we're going to, again, wait for that next time when the VIX spikes, jumps back up to over 18, 20, 25, even as high as 30 levels. That would be ideal for us to dollar cost average back into the market. Looking at crude oil prices, so crude oil continues to, of course, break down. We're seeing a little bit of rebound after this breakdown for this head and shoulders. We're starting to move back higher. Resistance is going to stay put at $81, $82 a barrel. So that is going to be that resistance, and that target and support level is going to stay put here at $73, $72 per barrel for crude oil moving forward as well. Talking a little bit about the 10-year treasuries, we're starting to see that pullback from highs of 4.7. And we're going to keep a close eye here at 4.35% for the 10-year treasuries as well moving forward. So a little bit of a pullback here. Again, very, very nice sort of area of support. We can call it somewhere between 4.1 and 4.35% for the 10-year treasuries. And resistance, like I said, at 4.736% is where it's going to be. And then finally, let's just quickly break down the Money Vest Index and where we are. We are at the moment pushing back over 3.8 is where we are. So 3.8, you can see how nice that recovery has been. Of course, we'll start getting more and more cautious and more careful here the moment it crosses over 4, because that's where we were back in March 27. That was a pullback. 419, you can see the 420 low was at 3, and that's where we started to kind of nibble with the light buying opportunities here and a very nice recovery back up. Really, the levels that I'm waiting for is 2.5 or lower for the Money Vest Index to really dollar cost average and start looking at levered ETFs from a risk reward standpoint, trading on the long side as well. Going over to the NASDAQ. So kind of hovering around all-time highs pretty much, just trading sideways. Support level at 16,000 as we've already discussed, down to as low as 15,900 on the NASDAQ here. By the way, let me just finish this. So 30-year bond auction, very nice bid to cover. So demand continues to be fairly strong. 2.41 is a pretty strong bid to cover. So again, the entire market was mostly green on the day, with Nvidia pulling back, Tesla slightly down. So again, all 11 sectors were green with the exception of technology. In the last 1 week, everything is up. In the last 1 month, again, most sectors are green except for energy, which has been selling off as we notice the head and shoulders breakdown for crude oil prices. Orange juice, rough rice, copper, oats, natural gas, everything pushing higher, with lumber prices, cotton decay, lean hogs, and canola selling off, and Bitcoin, of course, back up to over 62,000, and Ether just over $3,000 as well. So back over to NASDAQ. Support level is 16K down to 15.9, and resistance right now pretty much the all-time high at 16.4. S&P 500 almost at all-time highs, also with a very, very nice momentum higher, and now we're approaching this resistance at 52.20. So that's going to be that level to keep in mind for the S&P 500. We'll see whether we get a breakout above this level or not. And support level, like I said, is going to stay put at 51.67 down to 5,080 for the S&P 500. Of course, beyond that, we pretty much got this huge area of supply and all-time highs sitting roughly at 52.75. Talking a little bit about Apple here. So Apple on the day pushing up to 184. And again, back on April 20th, it was around the 165 level, which is where we picked it up. I sent out the alert for buying a little bit of Apple, not too much, up over 12.5% from those levels. Very nice, recovery higher. Targets still going to be closer to 195. 196 for Apple moving forward from those levels. Amazon, on the other hand, also breaking out to new all-time highs. Well over 191. So congratulations to all Amazon shareholders. Very, very nice and slow and steady progress here from Amazon. It's done really well from its lows of about $83 per share. It's now almost at 200. And that's been a very nice 136% gain since December of 2022. So very, very nice move to the upside. Higher highs and higher lows for Amazon. Talking about Tesla. And Tesla, of course, still struggling right now, down about 1.5%. I did a video on Tesla earlier today, so make sure that you do check that out. But resistance is going to stay put at 177 with a massive support here inside this green rectangle in the 150s for Tesla. with, of course, a resistance, a huge wall of supply that we have discussed in the 190s and 200s for Tesla moving forward as well. So that right there is going to stay put as a massive area of resistance and supply. And again, support level is going to stay put in the 150s. Talking about NVIDIA. So NVIDIA is going to be reporting earnings very, very soon. It's now starting to get rejected here at this resistance at closer to $909, $910. So this right here is going to be that level to keep in mind, with the support level staying put at 845 down to as low as 741 for NVIDIA. So a little bit of consolidation sideways. It was in a downtrending channel, then it broke out a little bit, and right now it's kind of coming up to that resistance at 909, the support at 845. Advanced Micro Devices also in a little bit of a downtrend, not really a little bit, but a massive downtrend. So lower highs and lower lows continue for Advanced Micro Devices. So this, would argue is a lower high, lower low pattern. Support level is going to validate it in the 150s inside this green rectangle, and resistance all the way up to 165 for Advanced Micro Devices. I mean, AMD is one of those companies that does feel like it has potential here from a risk reward standpoint and has the potential to reverse back to the upside, 164 to as much as 183. Couple of resistance levels to watch, with of course a massive support here inside in the 145 150s for AMD. Talking a little bit about PayPal. So PayPal on the day pushing higher 1%, so not bad, validating this higher low that we discussed in our yesterday's market update. So still very much in the context of this uptrend, but it really, really, really needs to break out above $70. I mean, this is a huge resistance and huge wall of supply for PayPal. It's just not able to break out above this level, and the next target and resistance is going to be $76, $77 for PayPal moving forward. So that right there, of course, is going to be that next level to keep in mind. But before that, we need to see a breakout over $69 to $70 per share for PayPal. Visa, on the other hand, continues to see that recovery very nicely. RSI, MACD, everything moving in the right direction. There was a massive support at 265, which we discussed, and the next target pretty much at all-time highs at 290 for Visa. But Visa, again, is a little bit more on the more expensive side in terms of valuation. So if you come over to statistics, 31 times earnings, a little over 16 times sales, and 27 times cash flow, definitely suggests that the company is trading at a bit of a premium here relative to other companies, and also just in general relative to the market, trading at a expensive valuation here. Talking about Meta Platforms, and Meta on the day up over 60 basis points, continues to move higher, but I do believe that we're going to find some resistance here at 477. I think this is where Meta is going to really struggle inside this sort of red rectangle. Previous support level could potentially start acting as a new resistance here now, moving forward tomorrow or next week. But that right there is going to be that area of supply. If we successfully break out, then of course I'd be happy to turn this into a support here. But I do believe that we're going to find some resistance here at these levels for Meta. Netflix, on the other hand, continues to, of course, move higher, 43 basis points. It got a huge breakout above 596, and that is going to be that new support level to watch for Netflix, and resistance and targets all the way up to 636 for Netflix. Very nice move with the RSI. MACD was looking pretty strong here from this reversal from lows of about 548, up over 11, almost 12%. Very nicely for Netflix here. Google, on the other hand, continues to trade sideways, so not much of an update, but just really consolidating after the earnings. Gapped up, pulled back, filled a little bit of that gap here, and then pushing back higher. So still within the context of this higher highs and higher lows, and support level is going to stay put at 154, 152. For Google moving forward. Talking a little bit about Microsoft now. So Microsoft on the day also continues to move higher very nicely, rebounding a little bit from its 394, 395 lows, and resistance going to be all the way up to 417 for Microsoft, all the way up to 430 for the company as well. So those right there are going to be a couple levels to watch for Microsoft moving forward. And then finally we come over to Enphase and Costco. So Enphase here, lots of consolidation, lower highs and lower lows. So still very much in the context of this downtrend, and support level is going to stay put at 106, 105 for Enphase. And this right here inside this green rectangle is going to be that area of support to watch for Enphase, all the way down to $92 per share. And finally, we come over to Costco. And Costco here also very nice breakout, and continues to see that momentum pretty much back at all-time highs for this company. So this has been a very nice recovery from that support level of $707, up over 10%. But I do think that Costco also, along with Visa and some other companies, trades at a very expensive, very high valuation at the moment. So hope you all enjoyed this video and a complete update on the markets here. Tomorrow, again, last trading day of the week. Next week, we've got inflation numbers. So we got lots to unpack next week also with a lot of earnings. But hope you all enjoyed this video, found it helpful. If you did, make sure that you drop a like and, of course, subscribe to the channel. I would really appreciate that. And again, links to our Discord and Patreon is going to be down below. The first week of the month is the best time to join. We'd love to have you on board. As always, happy investing. I'll see you all in the next video.